But since everybody's here, I thought we might as well get started. Everybody that signed up anyway. So welcome to the Cornell Cooperative Extension 2021 Tax School. Our presenters today are myself, Mariane Kiraly. I'm the Senior Resource Educator, and Sandy Whittaker, who is a local tax preparer, and she's been helping me do this for several years now. And it's kind of fun to work with Sandy, but I kind of wish we were all in the same room.
Yeah, that would be cool.
But maybe next year. So it looks like you've all muted yourselves and everything, and hopefully you don't get lost along the way. I'm at the office. I'm the only person here today. Our office is closed most of the time. I mean, people are here, but there's not people coming and going. But anyway, feel free to unmute and ask questions as we go along, or you can wait toward the end and ask questions. I did receive the Farmer's Tax Guide, and I have all my packets and envelopes. I worked on that this morning. I did receive the federal packet, just the 1040 schedules, and I'm waiting for UPS because they said they were coming today. So I'm hoping that after the program, they bring me the forms and I can mail you out the rest of the packet. I did want to mention the sponsors of our program today include Dr. Christine Kamen of Ruminant Health Services, Dutton Veterinary Services, and Don's Dairy Supply. So we wanted to thank them for their generosity. They help us with all kinds of things that we do with programming, and it helps defray the cost of programs to others. So I'll just start with some of the changes that you want to be aware of, and then I'm going to turn it over to Sandy. Mileage actually went down because fuel went down, but fuel is back up again, but 56 cents a mile, down from 57.5 cents. The minimum wage increased to $12.50 an hour upstate, and that's us, of course. 1099s, there's a little change for this year. They've come up with a new 1099 NEC, which means non-employee compensation. And if anybody needs one of those, well, there's two on a page. You can email me or let me know at the end, and I'll put one in your packet along with the 1096. The $600 rule for the 1099 miscellaneous still applies. And we do have all of the W-2s, W-3s, 1099 forms, and other disclosure forms that you may need. So if you need one of those, I'm happy to just slip it in today's packets along with anything else that happens to be mailed here and shipped here today.
And we want to stress that it's very important that we do not send in handwritten 1099s because they will be rejected. And so they need to be typewritten or done by computer.
So for those of you with employees, you know that so much has happened this year with new labor laws in New York State. And there's been hearings, there's been a lot going on with new labor laws. There are now disability benefits and paid family leave for employees, and the coverage is mandatory. For farm employers, owners and operators are required to provide disability benefits and New York paid family leave coverage to eligible farm laborers. Now, in the past, you know, farmers have been exempt from a lot of things, but the state is trying to make farm employees, employers subject to all of the things that any other employer would be subject to. They had hearings last week on this overtime provision, and they decided to keep it at 40 hours as the threshold for overtime. So as long as somebody isn't working over 60 hours, they don't need to be paid overtime. That is still going to be under review this year again, probably more toward the end of the year. Also, employers must provide at least 1 day, 24 consecutive hours of rest, the day of rest, in every calendar week. So this is something that was new earlier on in the year. And so it provides 1 day of rest. And so all of these things that have changed, these are just the highlights here. There's a farm labor overview at the Cornell Cooperative Extension websites. Richard Stupp is the one statewide who is in Pro Dairy, and he makes sure that we know all these things, and he puts out a lot of articles in Country Folks, and I try to put articles in our newsletters about things as they change with labor. Even though this is the income tax school, you can't hardly separate the two. So we did want to mention those things. And if you have questions or you need more information, just let me know. So Sandy, you want to take it away on the CFAP?
CFAP are funds that were from USDA and Farm Service Agency. They're taxable just like any other government payments. They go on 1040, lines 4A and 4B on the Schedule F. Employee retention tax credits if employers kept employees on payroll, provided for sick leave, family leave, can also defer payroll obligations in light of the ongoing pandemic. One of the things I'm not recommending that we defer the payroll tax obligations, because especially for if you had employees, they gave you the opportunity not to deduct FICA Medicare. But if you did do that, it puts an extra burden on the employee for January, February, March of 2021, because they're actually going to withhold double during that period to make up for those deferred payments. Individuals, like some of you may have already received your stimulus payments we got 2, or most people got 2 in 2020, $1,200 per person and $600 per person. This is a refundable credit. It's like prepay. It's like Mariane says here, if you're going to owe $2,000 on your taxes and you got the $1,800 credit, that $1,800 is going to reduce your tax bill, and then you'll get a refund of $200 rather than the refund of the having to pay the taxes. Now, if you didn't receive your stimulus payments in 2020, there is a way to be able to get it through your tax return, and they call it the recovery rebate credit worksheet. And that's going to be a full page worksheet. Work through it. It tells you whether or not you qualified for the credit. If you did, you can say you did not receive it, and then they can get it through a refund on your tax return.
Just a clarification on the CFAP, I left off when it says the top of the 1040, it's the 1040F, the farm form.
F. Yep.
I'll have to modify that. Okay.
Now
So
okay, go ahead, Mariane.
on these EIDL and PPP loans, if you've applied for one and a portion was forgiven, the loan isn't considered income. In other words, it's more like a grant. And the expenses paid for with the forgiven money are not deductible because, they're giving you that money. So you can't really deduct the expenses if you use the money to pay for salaries or things like that. So you can't double dip, as we know. And, it's so hard to keep track of things, especially this year when you're getting things, you're getting more payments, you're getting things that you weren't expecting. The importance of good records of course, we know on farms, we've got to keep records, but really good records. So if there's a question, your tax preparer or you can find the information. So document these payments, however your record keeping is. If there's a memo, put it in. And I don't know if anybody in this group got a PPP loan, but I know quite a few people around that did. And it's there's still paperwork to do to get it forgiven in some cases. So it's paperwork, but it was a good program, and many businesses benefited from that. But if you have questions about that, make sure you let us know.
And only the PPP loan is forgivable. The EIDL loan is not. That needs to be paid back, but it's at a very, very low rate of interest.
Oh, okay. That is a loan.
Yeah.
Okay. Sandy was talking about the pandemic related worksheet. It refers to line 30 of the 1040. So like I'm looking at line 30, and you'll have one in your packet. It's called the recovery rebate credit. So it's just one of those things. There's a long worksheet. I mean, the worksheet's almost as long as the capital gain worksheet used to be. So now you know what I mean. It's a long worksheet.
It's complicated.
And so you just have to just do it line by line. And if you have trouble, hopefully Sandy and I are working on, doing our own. And of course, Sandy's a tax preparer, so she's going to be able to answer any questions that you might have. But it also says here, if you receive notice 1444 or B, you can have those notices available to help you fill out that credit worksheet. Most of the programs are going to do this for you when, they ask you questions and how much you got and when did you get it and things like that.
We have the same schedules that we've had the last couple of years. Schedule 1 is for additional income and adjustments. This is, in prior years, everything ran through page 1 and page 2 of the 1040. In the last couple of years, they shortened those up considerably and decided to add 6 more new schedules. And that's what these schedules are due. Schedule 1 is additional income and adjustments. Schedule 2 is the tax. Schedule 3 takes care of non-refundable credits. Schedule 4 are other taxes. Schedule 5 is other payments and refundable credits. Excuse me just a moment. And Schedule 6 are foreign address and third-party designees.
So I'm looking at those schedules now, and the nice thing about it, this package, is if you're doing it yourself and you're filling it out, the print is really big. It's not like the 1040 itself is about the same size, but when you get into these schedules, there's lots of space to write stuff. I find them so much easier to read. So they're trying to help us out, I guess, and that's a good thing. So those are your schedules. They'll be in your packets.
Oh,
And then, of course, you have your lettered schedules. Schedule A, your itemized deductions. B, interest and ordinary dividends. C, profit or loss from business. And the EZ. And I just wanted to mention here, if you have another business, like some of the folks have you may be selling processed product like a meat business or a cheese business. That has to be reported on Schedule C. The raw product is the beef on the hoof. That's kind of the agricultural product. or sap, say. Sap is another raw product. But the processed product like syrup or meat, packaged meat or packaged cheese would have to go on a C.
Tell my tax clients that if it's raw, like you said, Schedule F, if you change it in any way, it becomes a Schedule C.
Right.
Another point to make is about Schedule A, itemized deductions. Not many people can itemize their deductions like they could in the past. There's a new place that you can deduct up to $300 of charitable contributions, and that's on line 10B on page 1 of the 1040. Up to $300 for married filing joint, or $150 for married filing separate or single.
So that's a plus if you didn't want to itemize and you're giving to your church, you know, or whatever you're giving to. So keep in mind that is under adjustments to income, line 10B on the front of the 1040. So that's going to give you a little deduction there and then, you know, pay less tax.
I remember reading about that when that came out. They wanted to encourage Americans to help each other.
Oh.
And this was one of their ways of rewarding us for doing that.
Mm-hmm.
I have a quick question.
Sure.
So for a new farm business like mine, who is basically making all capital investments and really doesn't have any revenue because I work an off-farm job from the business, would I file capital gains and losses or Schedule F or both?
Schedule F. Capital gains and losses is only when you're selling livestock or machinery or equipment or land or stuff like that. But if you're doing just starting up, your expenses would go on Schedule F.
Thank you.
And all those things that you're buying are depreciable. So you're going to have to start a depreciation schedule. And we'll talk more about depreciation. But starting up your business, you will be eligible for some good credits, especially from the state of New York. And I believe there are some lenient, you know, you're going to probably have a loss because you don't have the income. So in that respect, you know, your loss is going to work against your other income that you have. So you might want to go the slowest route on your reserve as much depreciation as you can for when you are making money.
Thank you.
Sure. So Schedule E, you know, those are things like rents, supplemental income and loss. It's like passive income, rental properties, partnerships, estates, trusts, and of course your earned income credit. That's Schedule EIC. That's been around a long time for people who have children. And I think there's others that can qualify. And then Schedule F, of course, is our profit or loss from farming. I looked over the form online. It didn't look like it had changed much from last year. So it's the same thing, of course. Income at the top, expenses on the bottom. And everybody made money this year, right? Your big profit number on the bottom.
More money than prior years, maybe.
Let's see. Sometimes when I stay on a screen too long, it doesn't want to advance, but it probably will in a minute.
Excuse me just a minute, my laptop is dying.
There it goes. So I did want to talk about Schedule J for a minute. Because we did have large payments from the government and we maybe weren't expecting that, you know, if you were able to replace a piece of equipment or prepay feed before the end of the year, that's a good thing. If you might have got caught off guard, remember you can always income average. You can average back to the last few years, which weren't as maybe is profitable, you could look at that to see if that's something that could help you pay less tax. Schedule R is the credit for the elderly or disabled. The SE form has changed a little bit. We'll talk about that in a minute. And then the 8812 for the additional child credit. So these are just your standard forms and schedules. It kind of helps you decide what forms you might need this year. So I did talk a little bit about Schedule J. It goes back 3 years. It's not a complex thing to do, but it may be something you might want to consider. And because next year, you know, we don't know what this next year is going to be, 2021, but we already know that feed costs are going to be higher. So if you are a dairy farmer or you buy a lot of feed, that will be a much larger expense than it was this in 2020. So just know that there is a tool, and the reason it's available because the federal government knows that farm income can be variable, and we just don't know from year to year how much we are making. It's hard to predict. And of course, I never really should call it extra income, but that's what it is. If it's floating out there and you don't want to pay tax on it, remember you have until April to put away money in your IRAs or other retirement funds. It's good to pay yourself, of course, before you pay the government. And I did mention the feed costs. So even though if you signed up for the DMC payments, they will come in, I don't think it will be enough to offset the higher feed prices, especially in the Northeast. So it'll help for sure, but the feed prices I've been hearing from farmers recently just make me think that it'll be good to get some of these government payments, but I don't think it'll make up the difference. So Sandy, go ahead.
Changes to be aware of in depreciation. 5-year depreciation is on new equipment as before. One change in particular is that, let's say you buy a piece of equipment and you're trading in one of your, like an old tractor towards a new tractor. We used to be able to take the trade-in value of the old tractor and deduct it from the cost of the new tractor and depreciate the new tractor at what they call the boot. Well, you can't do that now. What you have to do is you have to treat the trade-in as if it were a sale. So you report the tractor that you trade in as a piece of equipment that you sold, and then the new piece of equipment will come on it as full value, even though it was used as a trade-in against it. Depreciation, 7 years is applied to used equipment. Section 179 expense deduction increased to $1,040,000. And if you use accelerated depreciation on the federal return, you need to do a separate, another depreciation form for New York State because they don't allow the same rate of acceleration of depreciation as the federal government does.
So again, it's all about paperwork and record keeping.
Want to be very careful. You want make sure you keep track of all equipment, inventory. I try to have my clients do an inventory at the end of each year of what they have. Sometimes they've stopped using equipment, so we take that off. You know, like they purchase new equipment, they trade out equipment. It's important to keep it, especially when it comes time, if you're going to sell, you know, your dairy or your equipment, you need to have a good inventory of what the purchase price was and what depreciation you've taken.
And we did have a question before the class about, does this apply to vehicles and scheduled property?
If they are used in a trade or business, yes, it applies to vehicles.
Okay.
Do you have a depreciation tool or calculator that you recommend or use so farmers can have a depreciation rate or?
I have a tax program, a schedule in my tax program that I use. I can research one that if you use QuickBooks, QuickBooks has a depreciation calculator built into it. But I can investigate that to see if there's one available.
Yeah, because, you know, using an Excel spreadsheet sometimes just it's harder to do. You could do that, but you know, it's not like they don't change these rules now and then. They do. And so it's,
Lots of new apps out there, so I'm sure there's some sort of an app that would help with depreciation, and I'll look into that.
okay. Okay. Now, who asked that question?
Oh, my name's Barry.
Oh, Barry. Okay.
And a follow-up question, is there depreciation on non-equipment infrastructure? For example, installation of a road that may need to be repaired eventually or replaced eventually?
So a road, it seems like that would be a long-term capital expense, wouldn't it?
Now, on the roads in they can go under conservation
Right.
payment repairs.
Because
I
it's
wouldn't
added to the
appreciate the improve.
land. It's added
Huh?
to the land.
Yep.
You know?
Yeah.
So that would be under conservation expenses, I think is the category. Soil and water conservation expenses, maybe.
Yes.
It's on page 27 in the farmer's tax guide that I'll send you.
And if it's used in your trader business, now if you were doing it and you weren't in the farming business or didn't have a business and you did improvements, so that would just be added to the basis of your property. But under the case that it's a dairy farm, you could deduct that as an expense.
Or any other kind of farm, right?
It's a vegetable.
Or any other kind of farm, yeah.
Yeah.
Not just dairy, yeah.
Yeah.
Social Security Form 1040 SE. Improvements have been made with a condensed form. Maximum earnings subject to Social Security is $132,900. I don't think there's many farmers in our area that reach that maximum. Social Security tax rate for self-employed is 15.3%. The form is simplified for 2020 with Part 1 for regular filers. Part 2 is the farm optional method, which you may want to consider doing this if you're coming up with a loss or not a large profit and you want to be able to pay more into Social Security. You might want to use one of these methods. The gross farm income wasn't more than 8460 or that your net profits was less than 6107. You can do the optional method and still pay some into Social Security, even though you may not have been able to pay it in because of the loss. Part 3 is a maximum deferral of self-employment tax payments. I wouldn't recommend this myself. I would pay them now because paying them and deferring them to the future only increases your tax burden for future payments. But, some circumstances you may have to. It's important to build up your social payments into Social Security as you are approaching 62, 65. I have a lot of farmers that wanted to save their monies for their operations as they were going through the years. And when it came time to retire, they don't have a whole lot in Social Security to fall back on. So the younger you are, you might want to pay attention to this and get as much paid in as you can.
And it's also important for disability reasons. If for families, if somebody gets disabled, the children are taken care of with payments from Social Security, but you have to be vested in the Social Security system. So I believe that would be 20 quarters.
Yeah, and they have a look back period too, so they have to be able to look back and see that you've had income within that look back period. I had one individual who applied for Social Security disability and hadn't worked in quite a few years, and they just missed the look back period by 1 quarter, so they lost their ability to collect Social Security disability. So it is important to keep something going into it on a regular basis.
So New York income tax, we have the 201 package. And Sandy and I are always frustrated because we can't even get our forms till, well, I can't get the forms till mid-February. They said they would mail them on the 11th. And I know it's almost the end of January, but you know, some people want to get moving on this. And Sandy, what did you say about filing?
I cannot even e-file any tax returns until mid-February. So not only can I, and I'm required by law to e-file all tax returns that I do. And so people can bring me their work, but we're going to sit on them until the government gives me the okay to go ahead and e-file. And I know New York State, I don't even have an updated New York State program or tax forms yet because they will not be available till mid-February.
So I guess my advice is just to work on the federal, and by the time, you know, you're getting your records done and the federal is done, then, you know, it'll hopefully be a couple of weeks and you can go ahead with the state forms.
Yeah.
I will send out the state forms as soon as I get them to those who want them.
You know, and if you're going to e-file, and it does that you can e-file the federal before you can file the state, I always e-file my federal separate from my state, just in case something is changed or not accepted on the federal return, then I can quickly correct it before I e-file the state one. So it might be an advantage not to file them together.
And they have the usual forms, and of course you have to put copies of, you know, your farm form and your Schedule D or any of the other schedules they'll ask for at the state level. The 201 ATT is the summary of credits. And of course, we are all, you know, looking to the farmer school tax credit again, which helps us pay our unfair burden of school taxes in New York. So that's a great credit. And as soon as I get those forms, I'll be sending them out to you. And of course, the vouchers if you need to pay in. So I was hoping that as you need forms, you can always just shoot me an email or call on the phone, and somebody here will send out a form to you if I'm not here.
One point to remember on the farmer's school tax credit is that has to be put on the Schedule F. If you deduct your taxes, school and land taxes on the Schedule F, let's say in 2020, and you get the farmer's school tax credit when you file your tax return. So in 2021, you're going to need to put that credit that you got as listed as other income on the Schedule F. So you have to pay tax. You have to report that you did get a tax credit on the Schedule F for the year following that you got it.
Right, and that's a good reminder. And everything is pretty much considered income, you know, this year, except for those, the payments, the incentive payments that we received, and you'll be working on those worksheets. I mean, you can also, you know, any forms that I don't have, that you have a special need, you know, New York really wants everybody to e-file. They hate sending out forms. They don't like to print forms. But the fact of the matter is, a lot of people just like to have a form and fill it out, and it's cheap and quick and easy, especially for people who have a W-2 and, you know, not a whole lot of other things. But I do give people credit for keeping up on and filing their own farm return. It's not easy anymore, that's for sure.
Right. And we're getting closer and closer to the time that they're not going to accept individual like handwritten or forms that go in, but you can always e-file yourself by buying a one of the tax programs that they have out there, that you can e-file your taxes through one of those rather than, and it's also helpful because it checks your math and gives you a lot of pointers along the way that you may have missed if you had done it by hand.
And don't forget other credits that you might have if you put in some energy efficient windows or doors, or even on your home. There's usually a credit for that. What are those credits, Sandy? Are they just state credits?
They used to be federal credits, but they don't allow you to do the federal credits anymore. For like we used to be able to do the insulation and the roofing and stuff like that. Now on New York State, the credits are for thermal energy or special fuels.
Okay.
Those are the type of credits that are out there now.
Okay. I did want to mention to folks, if you need me, I'm not in here very much, but you can also email me. You can call me at home if I'm not here. I get a lot of calls at home. And then I can always refer questions to Sandy too.
Yep, I'll be happy to get back with them.
So now we're probably, what I'm doing here is I am recording. So on our website for CCE, we have a YouTube channel. And this winter, we recorded all of our Catskill Regional Ag Conference workshops. There were 21 in all. And it was a lot of workshops. But, we put a lot of work into it. And so we uploaded all those. And there are other things on our YouTube channel you can upload too. But now I'd kind of like to turn it over to Sandy and to see what kind of questions do people have. We're happy to answer questions. We get to see people now. You can turn on your cameras if you want.
This is Roger Bowles. How do you handle the sale of the dairy raised animals versus bought animals?
Raised animals go on Schedule 4797 Part 1. And then the purchased animals will go either Part 2 or Part 3, depending on the length of ownership. I think Part 2 is for less than 1 year. Part 3 is more than 1 year.
Okay, thank you.
Hi, this is Scott Barrett. I have a question about solar tax credit, New York State. System was, down payment was placed in 2019, enabling us for a 30% solar tax credit, and it was finished in 2020. Is there a special form regarding that as far as filing?
That I do not know. I'm not 100% familiar with the solar tax credit. But I can look that up and get back to you on that.
That would be great.
Yeah, I have his email, so I can forward that to you.
Thank you.
So the payment, you've got a down payment in 2019, you said?
Correct. We put 5% down to pretty much lock us into that 30% solar tax credit.
Oh,
Of course, they extended it out for a year to 2020, but the system went online last January of 20. So now it's time to apply for that solar tax credit, or at least file that. And I guess you can use it over multiple years.
Oh, okay. Right.
So, if there was a profit, you could apply it to that year. If there wasn't a profit, you could hold it off. Kind of like depreciation, I guess, on the same.
So you would have some carryover there.
Right. And there's also depreciation on the solar panels themselves. So you can also claim your depreciation.
Wow. Yeah. Okay. So Sandy will probably be looking into that for you.
That would be awesome.
Any other questions on farm employment or any of the new 1099 NEC, if anybody needs one of those? Remember, it's a 5-year depreciation on new equipment, 7-year on used. Remember, if you're trading in something, you're going to act like you're just selling that. And it's going to be either a capital gain or loss. And then your depreciation will be on the full price of the piece of equipment that you bought. I mean, it just makes more paperwork. But I guess the state thinks that, or the federal government thinks that is something that we all want to do.
Marianne,
Hi, Frank.
can you hear me?
Yeah.
I guess I've got myself unmuted. Just a question about on our labor on workers' comp on our grandson. He's the only employee we have now is our grandson. We've kept workers' comp up for, we had a cousin, Gretel's cousin, but do I have to? It's pretty expensive, and for the amount of labor, the minimum is. What do you think? That's kind of a silly question.
800 a year or for minimum? Or?
Yeah, it's over 1,000. He's
Yeah.
making over 1,000. Most of the time they live in Manhattan, but right now they're here, and he helps me with hay and whatnot.
So I thought the rule was that you had to pay comp on anybody that you paid over a few $100s to.
Oh,
But
regardless.
But I'm just wondering if because it's just one person and there could be a way around it with, he's very seasonal.
Plus
Yep.
also he's family too, so there might be special rules. You might want to check with your broker, the person that you get the comp insurance from.
Oh, well, that's the state.
Oh, you're doing the
State fund.
state program? Yeah, they'll just say that you've got to do it.
Got to do it. Okay.
I just wondered, the thing it does protect you on is if he gets hurt and, it's haying and it's tractor use and that kind of thing. But you can check to see if there's a way around it because he is related. The only other thing I was thinking is he could be a self-employed person that you're issuing a non-employee compensation form to, because he's not regular.
Well, that's something I hadn't thought of. Eventually, the farm's going to my son and eventually my grandson probably too. I have 2 grandsons, but we're thinking of things that they might do with the farm besides what we're doing now.
If he was a part owner, you wouldn't have to pay it, or if you gave him if he was working for a percentage of the hay sales or something like that.
Oh, yeah, that's an idea too. Yeah, those are good ideas, Marianne. Thank you.
But you have to have a written agreement.
Yes.
Okay,
just to give you an example, there are many in the past dairy farmers with a son or daughter coming up would give them a percentage of the milk check, so they were getting their own check. So there could be checks written to your grandson for hay, and then he would be considered a part owner or farmer, and he could just there might be a way to do it there.
That's a good thought. One of my thoughts have been we're going to be looking at the high tunnels, through Farm Service Agency, and they live in Manhattan, and right around the corner where they live, they have the city they shut down Isham Street, which is right around the corner for them for the farmers market every Saturday. So there's things that could be done they could do. My
Mhm.
grandson, I'm losing my phone, Marianne. Sorry.
But,
I
but
guess
we hear
I'm
you.
gonna have to get out.
We hear you pretty good. I think maybe he could start up his own farm business.
Okay, good. We'll give that a good thought, Marianne. Thank you.
Okay. Anybody else have questions?
I have another question. Sorry, I'm brimming with questions.
Good.
So I invested personal funds to the farm to enable the farm to, for example, install a road, make capital investments. Do I count that as farm profit and personal loss? How does that work?
Are you filing as a farmer?
So most of my expenses for the farm, because I have an LLC and I have a bank account. So for example, I wrote a check from my farm for the construction of the road, just to give one example.
What form, are you an LLC filing a Schedule F personally? Is that correct?
I guess so. I'm the only one who's farming, so.
Oh.
Yeah. Those expenses would go on the Schedule F. It's not a personal loss for you yourself because you are the business. You are the LLC. So it's not two separate entities. You got the farm and then you got you. If it was the farm was a different business and you were loaning them money, that's a different story. But in this case, it's you. So there's no personal loss or anything there.
Okay.
But you will end up with a loss anyway.
Yeah, in the end.
Oh yeah, I mean, I had no revenue from the farm. It's literally just a vacant hayfield right now with a road.
Yep.
So
Right.
That's okay.
Yep. You'll
I'll
end up
start
with a
something.
loss. It'll be a
Yep.
negative number at the bottom of the farm form.
yeah.
And that way, when you have that negative number,
And offset your other income.
yep, it'll offset your other income on the 1040. Because when you go through the 1040, there's a line called, let's see, it's a little different than it used to look. Where would she put that negative number on the 1040?
It's going to go under Schedule 1, additional income and adjustments.
Oh yeah, there it is. Yep. So on Schedule 1, your negative number that you end up with will be on that form. Under adjustments to income.
And then in terms of my off-farm income, does that go on the Schedule F?
Nope, that goes on the 1040, your
Okay.
W-2 income.
Mhm.
That would go on the 1040. Under on line 1, wages, salaries, and tips, forms W-2. So what happens with that is you're going to be working the negative against your regular. When you get to the bottom of the Schedule 1, it tells you where to put that adjustments to income, goes over onto the 1040. Line 10A. So just above the charitable deduction line.
The only thing that goes on the 1040 itself, as far as income and expenses, is only that which is related to the farm business. Any other income goes on other places in the tax return, depending on the source.
Great, thanks.
Anybody else have questions today? We're open for business.
I have another question. Is it your experience that most accountants are equipped to help farmers with their tax returns, or do you recommend finding an accountant who works specifically with farmers?
It's good to have somebody who's familiar with farms. Like Sandy. She's been involved with the family farm for many years. And she does farm returns. But yeah, it's best to find someone who is familiar, because there's so many rules with farms, and just knowing what a conservation expense is, you know, it's really, and as you get more into your farm business, you'll be getting more into specific things that you'll be writing off, and just being able to manage that depreciation and everything. It really is best.
Yeah, it's also because if you get the right preparer or somebody that's familiar with the business that you're doing, then they'll be able to ask questions, or they may know things and be aware of expenses and other things that you can deduct that someone that wasn't familiar with doing farm taxes or like that wouldn't be able to answer. Any other questions?
Roger Bowles here. Where do 1099 NECs go?
They go to the same place that that the regular 1090. You mean where they filed?
Yeah.
Yeah, they go to the same place. They're filed with the 1096, just like a regular 1099 miscellaneous. But they go to the appropriate address on the form, depending on the state.
On the 1096, there's an address on there. It's a place in Austin, Texas.
Okay. How about the ones that you received? Where do you report them?
Okay, depending on what they're for. Are they for your farm related?
Work for another farmer.
Okay. Yeah, you worked for another farmer.
Right.
Was it custom hire?
Basically.
I mean, it seems to me, Sandy, that as a farmer, he could put that on the top of the Schedule F if he wanted to.
Yep. Because there is you can put that in there.
I mean, the other thing is, you know, you'll be paying Social Security on that.
Pay Social Security on it anyway, whether they reported it there or on the Schedule C. Now, are you using your own farm equipment as part of this custom hire, or is it just your labor?
Just labor.
I'd report it. It's farm. I would report it on Schedule F. I wouldn't have a problem with doing that.
Okay. Thank you.
Does anybody have any special needs about the federal forms, or just I'll send you what I think you need, and then if you need something else, you can let me know.
I think I need a 1099 NEC for the driveway installation.
Oh, okay.
Road, whatever it is. Thank you.
Okay, and I'll send you a 1096 with that. And when you get it, file it as soon as you can.
Okay, thank
I
you.
forgot what the date was, but it's.
It has to be the individual by the 31st and out to the governments. I think it's mid-February. But now, are you issuing the 1099 to a corporation? Is this business incorporated?
They're an LLC, which I think for the purposes of the 1099 doesn't count as a corporation. Do I have to issue anything to the folks who did the work, or I'm filling out the form myself only?
You fill out the form, but is there on those forms, when they gave you an invoice, there probably was a separation of materials and labor. Wouldn't you think, Sandy?
Yes, if they separate it between materials and labor, you issue the 1099 for the labor only. If they don't give you a separation of materials and labor, then you issue the 1099 for the total amount of the invoice.
Okay. Yeah, when they did the estimate, they separated labor and materials, but on the invoice that I paid, it was one lump sum.
Okay, so if you know the separation, I would issue it only for the labor.
Okay.
And so it's like a personal services thing. So the other thing they ask you on those forms is their federal ID number. So you'll need to get that if they didn't give it to you on the invoice. Some people won't give it to you after the fact. You could always say, well, I'm going to issue it for the whole amount if you don't give it to me for the labor.
That's a good tool. So if the cost of just the labor alone falls below that threshold, then I don't fill out the form.
Right.
Okay.
You don't have to, no.
Okay.
If it's under $600.
Okay. I think it'll be more, but.
Excuse me for a second. In regards to the 1099 NEC, we rented out land to I believe it was a partnership. We should be receiving one of those, correct?
You should be receiving a 1099 miscellaneous. The
Miscellaneous.
1099 NEC is only for non-employee compensation. So there's two, and you used to be able to report everything on a 1099 miscellaneous, and it encompassed all of them. But this year they decided to make it interesting, and we separate the non-employee compensation to a separate form. So rental income would go on a miscellaneous.
Okay.
And that's a separate form and a separate cover sheet, 1096.
So here's another question that doesn't really relate to farms. 1099 NEC, would that be issued out to a part-time pastor at a local church?
I would think.
If he's not an employee, then you would issue him a 1099 NEC, yes.
Okay, thank you.
It's over 600.
Correct.
I mean, it's a personal service, but I didn't know, on his income tax, he can shelter some of his money as a religious person. But I think it's up to you to provide that so he has a record of it.
Correct.
Very good.
I mean, do you need that form?
No, I was just settling a conversation with someone else.
Okay, sure. But if you need the form, I'd put it in your packet,
Well, if you want to, that would be great.
Okay, so a 1099 NEC for you too,
Thank you.
and a 1096. I know they're like gold, these NECs, because nobody got them early because they didn't know that there was a new form. And even our people here in the office, they were like, I got the wrong forms. So I sort of bribed our financial person here, if she would do something for me, I would give her 6 forms. She needs to buy me lunch.
Luckily, I found out about this when I took the course in October, so I was able to get 100 or so of them then.
Wow.
Is that lunch considered non-employee compensation?
It's considered a bribe. Any other questions? You can certainly contact us, contact me. If it's a question I can answer, I'll try. I can forward it to Sandy. She's gonna work on that solar stuff. I'll be sending out the forms. So if you need anything during the tax season, just let us know. If you need help with record keeping things. As you know, Cornell has our standard, the farm account books. We have big ones, small ones. We have a beef account book. These are handwritten books, and a lot of people don't want a handwritten book, but we still sell a lot of them every year. We also have the wage account book. So we do have some things, some handwritten tools. Some people start that way until they're good, and then they go into a computer program.
Marianne, a while back, I got an email, I think it was from Cornell Cooperative Extension, that they were offering classes to farmers for teaching them how to use QuickBooks.
That's right. That was the Central New York team.
Yep.
So
QuickBooks is actually a pretty easy program to use. If you can fill out a check register, then you can use QuickBooks.
And those farm account books are available on Cornell's website?
Actually, we have them here at the office. Most offices have them, but if your local office doesn't have them, I can mail one out to you. The dairy ones are $20 plus mailing. The beef account books for some reason are only $10. They're just as thick. And then of the dairy ones, we have a really big ledger size, and then we have a compact size. It just depends on how big you write and how big a book you want.
Or how bad your eyes are.
Right.
Bigger one's
Right.
better.
Yeah, I mean, most offices do have some. So you could check with your local office.
Thank you.
As a tax preparer, I would recommend them highly to individuals to either do the farm account books or the a computer program, because I still get lots of things in stacks of paper that I have to summarize, and it's much nicer if they do it.
The
How do you
bot,
feel about a spreadsheet format where each of the Schedule F expenses is kind of a column in the spreadsheet?
That works.
Okay.
That works good.
yeah, I mean, if you like Excel and if you like spreadsheets, what kind of a business are you starting?
It's going to be a diversified vegetable business.
Uh-huh.
Mhm.
So I think, I've looked at some vegetable enterprise budgets, and there's just a lot of inputs, a lot of entries. I was surprised at how many categories there were for each enterprise. So, I think that would be good to start that way, because, and maybe keep your enterprises, sometimes you can make a lot more money on, I don't know, kale or than beets, or, vice versa. Sometimes it's good to have that detail so that you can do an end of the year income and expense for that particular enterprise, or that particular part. Vegetables is a really huge category, and a lot of times people find that they might lose money on, say, sweet corn. They're probably going to make money on sweet corn, but make money on sweet corn and lose money on, I don't know, something more complicated like cauliflower or broccoli.
Yeah, I think I would probably definitely have a separate enterprise budget for high tunnel and greenhouse crops, and
Yeah.
then crops that are similar, like direct seed, quick succession
Mhm.
greens,
Greens, yeah.
have one expense report for that, and then you know, like the long season transplant crops like kales have a different
Mm.
enterprise budget for that, because I'm probably going to be growing like 20 different varieties of crops. So
Wow, wow. Yeah, I looked at some of those enterprise budgets and I thought, oh boy, that's a lot of paperwork. So yeah, I think you're smart to group like you're going to.
More detail you have, the better planning you can do.
So if there are no more questions for the good of the order, we will adjourn our meeting today. And feel free to contact us at any time.